President Donald Trump has made a fresh round of tariff threats aimed at both Europe and Apple. Trump says he will put a 50% tariff on all European goods starting on the 1st of June, after saying that trade talks with Brussels were basically going nowhere. He is also warning Apple to move iPhone production to the US or face a 25% tariff on imported devices. For more on this, I'm pleased to say I'm joined by Al Arabiya senior correspondent Carina Kamel. Carina, always great to have you on the show. A lot of news from Donald Trump today, but he is threatening a 50% tariff on the EU. What has been the reaction to this hefty increase on the markets?
We have seen a sell-off across global markets today. European markets closed down sharply lower, and we saw the greatest losses in the French markets, the German markets, and the Italian markets, because their companies will perhaps most be affected by this threat to impose tariffs of 50% as of June 1st. So that's in a matter of days. Interestingly, the London market was down, but not as much as other European countries, and that's because obviously the United Kingdom just a few days ago signed a deal or a preliminary trade agreement with the United States. We've also seen risk-off sentiment in general across markets. If we look at Wall Street right now, markets are down still. They opened down, and the greatest losses today in the United States are on the tech stocks. The NASDAQ perhaps also weighed down by those Apple shares as well, dropping dramatically today. We've seen losses also on the US dollar. In fact, the US dollar is headed for a weekly loss. Gold is up, giving an indication that investors are turning to safe havens in this time of uncertainty. We're seeing also the indices that measure volatility. So the VIX index in Europe is at a 3-week high, and a 2-week high, the VIX index in the United States. If you look at the sectors also, we've seen the auto sector in Europe, that's seen the biggest falls. We've seen also the luxury sector drop nearly 3%. Stocks like Porsche, Mercedes, BMW, all these companies will be directly affected if the tariffs come. And this is really the last thing that markets needed right now, because we're coming off the backs of Moody's downgrading the US debt on Friday last week. As our previous guest indicated, the House of Representatives passed the tax bill, essentially a giant budget bill that will potentially add trillions of dollars to the U.S. debt. Now, that may be good for the Trump administration, but it was very worrisome for investors and indeed the bond market as well. And so the last thing we need is the trade tariff talks coming back into the headlines and weighing on investor sentiment, in addition to all those other factors.
Yeah, and somehow, Carina, we're just seeing the market stabilize after Liberation Day, but risk-off sentiment today, as you did say. Carina, Trump appears to be calling for the return of tariff negotiations between the EU and the US on social media. He is clearly not happy with the progress being made.
Absolutely not. And this is a classic Donald Trump move. Ramp up the pressure just as negotiations are getting underway. And the context of this is that the European Union has revised a previous trade proposal and presented it to its U.S. counterparts earlier this week. So what we're hearing today from the president and from the Treasury Secretary is perhaps their response to this refreshed deal that was offered a few days ago. Donald Trump saying that the negotiations were difficult with the European Union. Scott Bessent saying that the EU was not acting in good faith, comparing how the EU is behaving versus Asian countries, which it said was negotiating, or which he said were negotiating in good faith. Trump going as far as saying that the European Union was created for the primary purpose of competing with the United States on the trade deal. And Scott Bessent also saying that perhaps this threat of additional tariffs, quote, was intended to light a fire under the EU. So it goes back to that negotiating tactic, ramping up the pressure in the hopes of getting some concessions. And the real sort of crux of the matter is that if we look at the trade deficits that the U.S. has with different parts of the world, we talked a lot about China being the #1 in terms of that deficit, but actually the European Union is #2, and the deficit is about $250 billion US in goods. And Donald Trump sees that as a very unfair relationship. So the aim of this sort of ratcheting up of pressure and ultimately a deal would be to bring that deficit down and bring the relationship more into balance. Just also to note that we understand a call took place today between the European Trade Commissioner Maros Sefcovic and his U.S. counterpart Jameson Greer. We understood the call took place, it ended, or it began about an hour and a half ago. So far, there has been no indication or no confirmation of what was discussed in that call.
And Carina, just going back to the NASDAQ, you say there's a sell-off on the NASDAQ today. That market is lower. We know that is the tech-heavy market. And as you mentioned, it's down to Apple. Now, what is Donald Trump saying? They could face a 25% tariff possibility. But why is this?
You know, this is not the first time that Donald Trump has mentioned his dissatisfaction with Apple's manufacturing processes. In fact, when he was in Saudi Arabia, he said, I had a call with Apple. I'm not happy that they're moving some of their manufacturing to India from China. We need to understand that 80 to 90% of Apple's iPhone manufacturing takes place in China today. Last year, Apple sold 60 million iPhones in the United States, and the iPhone represents more than 51% of Apple's overall revenue. Therefore, the iPhone is very important for Apple, and China is very important for Apple. Now, we know that Apple, in sort of trying to circumvent the tariffs on China, was going to move its manufacturing to India. Clearly, that is not satisfactory to Donald Trump. What he wants is for Apple to establish manufacturing facilities in the United States. Now, it's worth noting that Apple has said it does plan to spend $500 billion in the United States in terms of hiring more staff, but also building up facilities in 9 different states. But that investment will not include Apple facilities, Apple manufacturing. And the problem for Apple, and this threat of 25% tariffs could be obviously devastating. Already, Apple said this quarter, without this new threat of tariffs, will cost the company $900 million just this quarter. But the problem is Apple can't just move manufacturing from China in a very short period over to the United States. If you look at the sort of setup it has in China, we talk about these cities, schools, hospitals, their entire cities just essentially created to manufacture iPhones. So it's not very simple for Apple to recreate that in the United States in a short period of time, because essentially the local skills are not available. But that is also what the United States wants to achieve. And Howard Lutnick talk about this. We want to reestablish semiconductor manufacturing and very high level, high tech manufacturing back into the United States. The problem is it doesn't happen quickly.
And Carina, I just want to ask you briefly before I let you go. You mentioned to me that the US dollar is down, gold is up, but I've noticed Bitcoin has really surged in the past few days. And I wanted to know, is Bitcoin becoming the new safe haven?
It is in many ways, and it's not just a safe haven, but it's also an alternative investment in times of geopolitical uncertainty and global market turmoil. On Thursday, Bitcoin reached a record high exceeding $111,000. There's many factors behind this. Obviously, last year, the United States allowed more institutional investors to enter the market through ETFs or exchange-traded funds, which essentially opened up the Bitcoin market to more investors in an easier, more stable way. The other key trigger that led to this increase in the price of Bitcoin over the past few days has been legislation passing through Congress, the stablecoin bill. Stablecoin is a subset of cryptocurrencies which is linked to the US dollar, and the US administration is pushing this stablecoin in a big way, and the legislation is progressing through the Senate. That was also a boost for Bitcoin. So given all the kind of environmental factors that are favorable to Bitcoin, if you add to that the fact that investors see it as a hedge against inflation, which is on the rise in places like the United Kingdom and potentially the US, they see it also as a hedge against central banks cutting interest rates, and therefore the return they could get on other assets may not be as high. So it's a hedge against central bank action. It's also a hedge against global uncertainty when you're not wanting to buy stocks, when you're concerned about is exactly what we've discussed, the sort of constant headlines and the markets fluctuating and the volatility in the markets. Perhaps it looks like Bitcoin, comparatively at least in this environment, could be seen as a more stable investment compared to equities.
Who would have thought that, Carina, just a few years ago? But great to have you on the show. Carina Kamel, thank you very much.